Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a fascinating story to kick off the show, and it's all about the latest developments in the world of cryptocurrency derivatives. As you may know, perpetual futures contracts have been gaining popularity in offshore markets, allowing speculators to bet on prices for everything from cryptocurrencies to real-world assets like oil and gold. But now, these products are finally making their way into the U.S. market. The Commodity Futures Trading Commission has given prediction market operator Kalshi permission to launch a perpetual futures contract tied to Bitcoin, marking the first time that a perpetual futures product has received the agency's blessing in the U.S. And that's not all. Crypto exchange Coinbase has also been granted permission to offer its U.S.-based clients access to cryptocurrency options and perpetual futures contracts trading on Deribit, an offshore derivatives exchange owned by Coinbase. This is a significant development, as it opens up new opportunities for U.S. investors to participate in the global market for cryptocurrency derivatives. But it's also important to note that these products come with their own set of risks, and investors should be careful to understand what they're getting into before diving in. We'll be keeping a close eye on this story as it develops, and we'll be bringing you more analysis and insights in the days and weeks to come. For now, it's clear that the world of cryptocurrency derivatives is evolving rapidly, and U.S. investors are about to have access to a whole new range of products and opportunities. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show, and we've got some exciting stories to share with you. Let's dive into our middle segment, where we'll be discussing the latest developments in the tech industry. We've seen some significant movements in the market recently, with Dell Technologies being one of the standout performers. The company's Q1 earnings report was nothing short of impressive, with revenue reaching nearly $44 billion and adjusted earnings per share coming in at $4.86. This has led to a surge in Dell stock, which is now up over 200% since the start of the year. But what's driving this growth? According to Dell's management, the company's artificial intelligence server orders have been a major contributor, with bookings reaching $24.4 billion and AI-optimized server revenue increasing by an astonishing 757% year-on-year. This has led to a record backlog of $51.3 billion, providing a guaranteed revenue stream for the company. We've also seen analysts weigh in on Dell's performance, with Bank of America's senior analyst Wamsi Mohan increasing his price target to $500 and citing a multi-layered growth thesis that extends beyond the current AI server supercycle. With a consensus moderate buy rating from Wall Street analysts and a mean price target of around $213, it's clear that Dell is a company on the rise. However, as with any investment opportunity, it's essential to approach with caution and consider multiple perspectives. While some experts are bullish on Dell's prospects, others may be more skeptical about the company's ability to sustain its growth trajectory. As we continue to monitor the situation, one thing is clear: the tech industry is rapidly evolving, and companies like Dell are at the forefront of this change. With AI adoption expected to continue growing in the coming years, it will be interesting to see how Dell navigates this landscape and whether its stock can maintain its current momentum. Welcome back to the Riskwiser Zone. Today, we're going to dive into an exciting development in the fintech space that's got investors buzzing. Robinhood, the popular brokerage firm, has just rolled out its AI agent feature, allowing customers to direct artificial intelligence to trade equities in a separate account with user-set limits. This move is being seen as a game-changer for the company, and we're going to explore what it means for investors. Now, Robinhood's stock has been closely tied to the performance of Bitcoin in the past, but this new development seems to be giving investors a fresh reason to buy into the company. The correlation between Robinhood stock and Bitcoin has actually started to loosen, with the trailing quarter correlation dropping to around 0.52. This is significant because it suggests that investors are starting to see Robinhood as more than just a crypto-adjacent stock. The AI agent feature is not just limited to trading, it's also being pushed into spending, allowing Robinhood Gold cardholders to let AI agents make purchases under monthly limits and approval settings. This move is seen as a strategic play by the company to expand its offerings beyond just trading and become a more comprehensive financial platform. But what do analysts think about this development? Well, opinions are divided, with some lowering their price targets for Robinhood stock while others see it as a buying opportunity. Morgan Stanley recently lowered its price target from $95 to $77.14, but the average analyst price target is still above $100. It's also worth noting that Robinhood has another platform story working in the background. The company's CFO mentioned that states and other public sector organizations have approached them about replicating versions of their Trump Accounts program. This could be a significant opportunity for Robinhood to expand its reach and become an infrastructure partner for these organizations. So, what does this all mean for investors? Well, it's clear that Robinhood is trying to pivot from being seen as just a crypto-linked trading stock to a more diversified financial platform. The question is, will this strategy pay off? Only time will tell, but one thing is certain, the fintech space is getting more exciting by the day. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.